That's right. I am the best trader in the world in hindsight. Today we're talking about the idea of hindsight. The trades always look easier in hindsight. You look back, you're like, why did I not take that trade? Why did I do this? Why did I? It's so easy to look back at the action and decide, wow, I should have done this, should have done that. It's a totally different scenario when you're actually placing a trade. Gonna break down this idea. Today was a perfect example of that, the hindsight. I'm the best trader in the world in hindsight. What's going on, guys? Patrick here. Today we're talking about hindsight, the idea of looking back and then looking at trades and, knowing exactly what's going to happen after the fact. Everybody's an amazing trader in hindsight. It's easy to look at the chart and be like, well, I could have done this. I should have bought there, should have sold there. It's so easy to do that, and it kind of fucks up your overall thought process as a day trader when you focus too much on the what if, the coulda, the shoulda, the woulda. That doesn't really matter, right? What you could have done, what you should have done, what you would have done doesn't matter. All that matters is, did you place a trade? Did you take profit? Did you have a stop? What was your overall trade? It doesn't matter. It literally does not matter what happens unless you took a trade. That's all that matters. If you take a trade, okay, that's a trade. You took it. But looking back at the day and be like, well, I could have done this differently. I could have done this differently. I would be up $10,000 if I would have bought at the bottom and sold at the top, right? Like, how many times have you had that discussion with yourself where you look back at the day and you're like, wow, I should have made a lot more money. I should have made so much money because I look back at the chart and I see all these amazing entries and, well, why did I not take them? Let's kind of look at today's price action and talk about some really simple ideas for trades based on, if you tuned into the live stream this morning, you would have seen that basically out of the open, we went sideways, chop, 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 sideways. We made one trade at open up there to the 60s, and then it was basically chop, 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 and the market just really didn't go anywhere. It didn't really start going anywhere until like later on in the day, which is kind of funny because people are always like, well, it's going to happen in the morning and then it's not going to happen in the afternoon. And if you look here at the SPY with the pivot points, we had this push up there to that pivot point at the 393 level. We kind of chopped around there. And then at the end of the day, we finally got that kind of decent move up to the highs. If we look here at the 3-minute chart, it's pretty cut and dry. My strategy, my overall idea of where I'm entering and exiting based on what's going on here. I think, this is a perfect example of the Patrick Whelan kind of breakout strategy here. This kind of a nice and easy pullback. This is basically 45 there. So about a 30-minute pullback. Sometimes it takes time. It takes 30, 40 minutes to get these pullbacks to finally get the breakout, and then there's that move higher. So, on this setup, we talked about this setup already. We identified this level from that like 66 up there to the 75 level as resistance from the previous day. That box that I drew there on the line, we already knew that was resistance there. So we kind of pushed up in there, we pulled back, and we kind of chopped around that level right there. So the big focus, as always, first off, we're above the VWAP. The VWAP's down way below us at this point. We have the MACD cross. We get this nice pullback. We have a really kind of nice kind of pushback candle right there off of the 51 EMA, and then we get that breakout, and then we're entering for that move up from the 72s up there into the 80s. And in hindsight, beautiful trade, easy peasy, mac and cheesy. Same idea right here. Same idea right here, same thing. We're bullish on the MACD. We get this breakout, a little push up from the 78s up there to the 84s, and then another Patrick Whelan breakout. This really right here would have paid nicely. The only problem with this setup is the MACD really didn't cross until like right here. So the MACD, a little bit lagging there, but I probably still would have entered that as we kind of bounced off of the 51 right there. We pushed back up above the 21. We got above the 8, and then we squeezed from the 80s up to the 90s. What's funny is at 11:20, I bought right here at the 60s and took profit at the 61s. And look at this. If I would have, obviously, in hindsight, if I would have held on from the 60s all the way up here to the 90s, well, then I would be rich. And it would be a totally different day. I had a $700 profit day. Not bad. It's still totally fine. But, there's my entry there at the 60s. My stop would have basically, it would have been close right there. Kind of 60, 58 area. So I'm in at the 60s, and that thing really kind of just ramped up. I walked away after that little trade, and, obviously in hindsight now, I look back and I'm like, well, I could have been rich Hey, it's 2023. Are you not trading futures already? If you want to get into trading futures, there really is no better way to go about it right now than checking out the Top Step Combine. There's a link down below if you guys want to learn more, discount and all that fun stuff. I'm telling you, I went through the combine, I followed the rules, and it really did make a big drastic change in my trading, because for the first time ever, I actually had to follow somebody else's rules. There's no hindsight with the rules. It's just, there's the rules, you follow them, you do the plan, you get through the combine, you then get into a funded account, you keep 90% of your profits, and woo, you're a funded day trader. The real question here is, what could we have done differently to kind of really get a better overall play today? I mean, I was entering here, we got the little breakout, we kind of chopped around for a second from the 60s, pushed up in there to the 70s, so 10 handles on that one. Again, from the 66s up there to the 78s. Pretty quick drop right there. Must have been some news or something happening, but in general, I really hate saying that it's a simple strategy, but the thing is, like, when the market's moving and the market's trending and it's pushing higher, like this breakout strategy in general is simple. It's very simple. Like, you just wait for the pullback, you find the support, you get the kind of breakout. We're looking for that first candle to kind of break out over that overall trend line. So like this one here, you probably would have had it like that, and then you get that breakout there, close above us, above the 80 EMA, and then we push up there to the 84. So again, in hindsight, we're all geniuses, and this is an amazing trade, and we would have made thousands and thousands of dollars. Like I said before, it doesn't matter what could have happened, what should have happened, what you would have happened if you would have seen different setups. Only what happens at the end of the day, like, what's your P&L? Is your P&L green? Are you red? I think it's good to analyze the moves, to analyze what's going on in the market, but you can't sit here and like think about like, oh, I coulda, shoulda, woulda, because it's just gonna mess up your overall thought process. And the thing here is, like, these setups that we see today, the way the market moved today, tomorrow could be a totally different day, right? Like when the news comes out tomorrow morning, the market could sell off, it could chop, it could be totally different. So you really have to make sure that if you're looking back at the action from like today, that you're not just like, well, tomorrow, if I see this setup tomorrow, I'm gonna take it no matter what. I'm gonna jump in, I'm gonna get crazy because today, I jumped in and it went higher, blah, blah, blah. But like, the thing is, what happens today isn't going to happen tomorrow exactly the same. It's not always going to be the same. Like, just because we pushed up to a high and then pulled back and then pushed through the high, like, that's not always going to be the same patterns. Like, these patterns play out in the bigger picture, but in general, every day is a new ball game. Every day it's basically starting new, right? Every day you start at zero P&L. So if you make $1,000 yesterday on a certain setup, well, tomorrow doesn't mean that it's going to be exactly the same. Like, just because you see a setup, the issue here is if you get too stuck in the hindsight, if you're just too focused on like what you coulda, shoulda, woulda, and then you let that coulda, shoulda, woulda mindset affect your next trading day, it can be really detrimental, because it'll mess you up, because you're like, well, yesterday I bought and it went higher, so I'm going to keep holding no matter what, and I'll take a bigger loss because I think it's going to reverse, and yesterday it did that. So you got to make sure that every day it's just starting fresh. We're trading a very strict kind of plan and strategy. It doesn't matter what happened the day before. I think it's okay to analyze, to think about what you could have done differently, but in general, the hindsight doesn't matter. It means nothing. You can be the best hindsight trader in the world. You can look at charts all day analyzing what happened before, but when the actual moment comes, when the setup comes, it's going to be a totally different picture. If you're looking at the chart and you're like, this is a breakout, you don't know for sure if it's going to break out. Looking at it in, 3 hours later, looking at it 5 hours later, you're like, yeah, well, that was a breakout. Okay, I could have bought there, sold there, boom, awesome. You don't know if it's going to break out, break down, get chopped up or what. So you really have to focus on just the simplest strategies. If you're new to trading, focus on just the consistency, the discipline, and not worry so much about the coulda, the shoulda, the woulda, the hindsight, because it really doesn't matter. All that matters at the end of the day is, what is your P&L? Are you red? Are you green? Did you follow the rules? Having a red day, following the rules, is still a good day. If you have a red day and you end up blowing up your account, you end up breaking the rules, well, then that's a bad day. And also a green day can be a bad day too, because if you do something stupid and you hold through a big drawdown and then all of a sudden you get back to green and you're like, well, I'm back green and take a profit. I mean, that doesn't make it a good green day, right? Like, you have to focus on what's the process. Like, did you follow the plan? Did you follow the rules? Don't focus on the hindsight. Don't focus on what happened the day before. Every day is a new day. Every day we start out with zero as our P&L.